Swarandeep, hi, it's good to have you with us. How have you
Yeah,
been?
all good on my side. Thanks for having me.
Uh, Swarandeep, there's great work that you're doing, right? And I'm excited to sort of host you for a session at Asia Tech Journal. Before we dive into our discussion today, right? Around Lykke Capital, I'd love you to take us through your, quick round of introduction would be helpful, right? And from there we take it forward.
Sure, sure. So I have about 10 years experience. By background, I am academic background. I'm a computer engineer.
Right.
Decided to start in a mix of financial services and tech
Right.
at my first job out of campus at Sapient. And since then, I have focused more on the financial services aspect than engineering or tech.
Right.
Like that, after a year at Sapient, I started my career in investment management with BlackRock,
Mm-hmm.
and stayed there for 3 years doing a bunch of financial services consulting projects,
Right.
mostly around investment consulting on the public market side for
Mm-hmm.
US and EMEA markets.
Right.
And as any other consulting projects or organization, like you get to see the diversity of different projects, mandates
Right.
that the organization does. So I think it was a really fruitful experience for me. And after that, after those 3 years, I decided that I wanted to move slightly ahead in terms of the kind of work that I was doing. So instead
Right.
of valuing bonds and other securities, I wanted to value companies and
Right.
like have more active role
Right.
in investments and
Mm-hmm.
those things. So there I started working for a Spanish VC fund
Right.
that was already so they had already made a few investments,
Right.
and this was an India dedicated early to growth stage fund. So we
Right.
made five investments out of our $15 million portfolio,
Mm-hmm.
uh, and had companies largely on the B2B side, but we had a small exposure to B2C as well.
Right.
Out of those five investments, by the time I left the company 3 years later, we had already exited three out of those five investments.
Wonderful.
And other than that, like during my later half of the career with the firm,
Right.
I was working on a fund of VC funds for pan European region.
Right.
So we were selected as one of the six investment managers by European public authorities
Mm-hmm.
to deploy capital into a European venture capital fund. So I was managing raising money for the fund, and also screening some venture capital funds, mostly like from Nordics area of Europe.
Right.
And after that, I decided to take a conscious decision to make a slight shift. So from investing, I wanted to focus on doing sustainable investments, and
Mm-hmm.
to be able to do that effectively and meaningfully,
Right.
I wanted to spend some time understanding more about sustainability, what are
Mm-hmm.
different themes, ecosystem players, and what is happening in different parts of the world.
Right.
So I joined international nonprofit based out of Copenhagen, Denmark.
Right.
That was started by like the company. A couple of chairmen from the company were chairman
Mm-hmm.
of Carlsberg Foundation and chairman of
Right.
Dahlberg.
Mm-hmm.
So it was set up from it started from Denmark, but the idea was to showcase Denmark as one of the leaders in sustainability and keep it as a rotating kind of caravan, you can say.
Right.
So from Denmark, we went to Singapore. From Singapore, we went to China next year.
Right.
And if COVID would not have happened, we had plans to come to India.
Right.
So there, my role had elements of investing or investment advisory, but it was not a pure play investing role.
Mm-hmm.
So this was like divided in three parts. So one
Right.
was community management. So we had about 4,000 individuals from 170 countries, mostly in the age of 20 to 35,
Right.
and largely divided across four major profiles. So one was academics, people who are either studying currently bachelor's, master's, PhDs,
Right.
or they are research associates or postdocs at different either research institutions or academic institutions.
Right.
So that was like about one fourth of the people. The next one fourth were people who were working in corporate and either were interested or were already doing sustainability roles at
Interesting.
those Fortune 500 kind of companies. Uh, the next one-fourth people were who were already running, like either they had founded or they were in the leadership team or senior
Right.
leaders in social enterprises, both for profit and non-profit.
Right.
And one-fourth were typically not directly aligned to sustainability, but they were specialists in their area. So there could
Mhm.
be UI, UX, software development, investing, or
Right.
GTM, and those kind of folks. So it was
Right.
a good mix of people that we had created so that they can learn from each other,
Right.
because it was essentially a very early stage idea builder or a venture builder,
Mhm.
focus on sustainable businesses, and by sustainable, mostly environmental
Right.
and socially sustainable.
Right.
And obviously, financial sustainability comes along with that. But they were focused on doing that. A part of my role, as I said, community management was to manage this entire 4,000
Right.
individuals from those countries, and we had about 350 institutional partners. So
Right.
how to best how to best use this network for advancing their businesses, getting their
Mhm.
pilots, paid clients, and getting grants and those kind of roles
Right.
that a startup needs in its very early and infancy stages.
Interesting.
One and the other part of my role was around running a pre-accelerator program.
Mhm.
So what we did was, in the first 2 years it was just a venture builder, but then we
Right.
realized there were some people who were actively working
Mhm.
once they went back after attending our annual
Right.
flagship program,
Right.
and they were still either stuck or they wanted some more hands-on support.
Right.
So we created a pre-accelerator program for people who had already attended our program and
Right.
they had made progress. So
Mhm.
this was a pre-accelerator program, largely virtual, even in pre-COVID times, because there were, like, I would say, about 50 to 70 nationalities represented. So it
Right.
was a difficult thing to kind of run this entire 6 month program
Right.
on in person. But what we did was, like, we divided into three parts. One was like before they came. So we devised kind of a boot camp format where 10 days were very, very intense, for
Right.
which they would be coming to a specific location, which in our case we piloted with China, in Shenzhen. Before coming to the boot camp and after the boot camp, it was largely virtual. So that's how we started the program. So I was a part of the accelerator or the program team at that. And third part of my role was also to do partnership alliances
Right.
globally with organizations where we could see some strategic support or help. So one
Right.
could be, say, mentorship for
Right.
these entrepreneurs, or specific around capital raising or fundraising
Sure.
advisory and things like that. So that was how my role evolved. And other than that, I was to continue what I was doing before in terms of investing. I had some external advisory or independent roles outside. So I was a venture scout at a Singapore fintech fund called Sazon Capital.
Right.
And before that, I was working with WeWork Labs, which was their startup portfolio
Right.
in India, to help them mostly around fundraising, strategy, and business development. So I
Right.
continued what I was doing before in terms of investment related,
Right.
but not hardcore. And my idea was to spend 2 to 3 years to get a really good hang of how this sector operates, what are some of the
Right.
biggest challenges in each of those SDGs, and then basically get back to doing the sustainable investing, sustainable finance. So that's what I do now. I'm a sustainable finance specialist at CGIR, which
Mhm.
is consultative group on international agriculture research. So
Right.
here my focus now is to on investment that are at the intersection of agriculture or food, water and land, which are basically three things which are very, very closely aligned for the food and
Sure.
agriculture sector. And along with that, I started my angel syndicate, which obviously was more
Which is
relevant
what
to
we're
this
talking
decision.
about.
Yeah.
Right.
So like, since I spent my time a part of my time in Denmark and had
Right.
mostly Danish colleagues, so I learned a lot about their culture as well. And one of the
Right.
things or a couple of things that stood out for me was Denmark was constantly ranked among one of the happiest nations,
Right.
like, year on year. And,
Right.
and a couple of themes that came out was that they have a concept of something called, like, in English we pronounce it as hige, but in
Uh-huh.
Danish they pronounce it puga. And a close parallel is Luca, or in English we call it as Lykke, which is
Right.
what I've chosen the name.
Right.
So they like the theme, the focus of both these themes is around happiness, but hookah is more around being content and having that cozy feeling, being
Right.
with your family and having a good time over, say, dinner or those kind of things. And like Leaky is very close parallel, which is more focused on happiness side of
Right.
Higa. So that's how I derived the name. And my idea was that I've been partnering with entrepreneurs through my role at the Spanish VC fund Exxon,
Right.
and here at Unleash as well, mostly helping them in different parts. So I wanted to continue getting happiness out of partnering with them, supporting them. So that's
Right.
how I defined the name Lykke Capital or
Wow.
Hookah
Very
Capital.
interesting. Very interesting. and my apologies on the outset, right? I think, I assumed this to be like, right? With a
Hmm.
different spelling. And I think, thanks for correcting me, right? So
Sure.
we'll address it as Leaky Capital. And very interesting. I think that's been a phenomenal journey, right? I mean, I think that's a very, very kind of, diversified journey. It's been a very experiential journey in, I think, in a lot of ways, right?
Hmm.
I think there are, many, many things that you've done, right? Uh, and I particularly like the sustainability aspect that you've highlighted, right, Swarandeep? I think that's a very interesting piece, right? And I think personally, I recently had a conversation with, me and Cody Sims, right, who's from Techstars, and he's essentially somebody who's championing the cause of sustainability investing, right? And we were on the
Hmm.
same panel. We were actually talking about it, right? And I think I've kind of become a fan of sustainability, right? And I think what we've seen in the with what's sort of say COVID has done, right? I think sustainability is something which has become very, very important, right? And I think we need to think sustainability first, right?
Hmm.
And I think it has to be part of, I think, our core narrative now. I think it has to be part of the core thinking process. It is not something which could be seen as as, say, from a lens of, say, exception, but I think it now has to be sort of looked at in a very different way, in a more mainstream way, right? I think that's going to be the way
Right.
forward. Swarandeep, what's the construct of Leaky Capital, right? How are you doing that, right? What are the kind of what's the thesis behind the structure? What are the kind of companies that you're participating in?
Hmm.
What's the check size, right? Tell me a little more about that.
Sure, sure. So, I think I told you a little about like the origins and how and
Sure.
why I started.
Yeah.
But in terms of like thesis, it is typically participating or co-investing. Like we don't lead rounds, given that our check size is between 20 to 50 lakhs, and
Right.
typical, even if it's like an angel round, typical angel rounds in India are like nowadays 2 crores and
Sure.
above. So
Sure.
we come with participation in that, and go up to pre-series A,
Right.
and in very, very exceptional cases still series A. But first angel round to pre-series A is something that is our sweet spot. Again, as I said, don't lead rounds, co-invest, and it is structured as a angel syndicate, which means that it is hosted on a tech platform, and the tech platform has a fund license from Indian regulator SEBI,
Right.
which means that anybody who's participating needs to be an Indian accredited investor, which by definition is INR 2 crores net worth, excluding primary residence.
Right.
So basically, what happens is that like the deals that I basically source, review, and evaluate. Once I am satisfied or convinced that this is the right investment opportunity,
Mm-hmm.
and I do have some folks from my network who act as advisors, so they are specialists in particular sectors like B2B
Mm-hmm.
SaaS, fintech, agri-tech. So I take their help alongside my own personal judgment to
Right.
see if this is a deal that is right for the syndicate.
Sure.
So in terms of sector, it's sector agnostic, at least for now, because as I've just done one deal, and as we go along and move along, I think it's a matter of time before I start concentrating or focusing more on certain sectors. But right now, since I'm building the deal flow, building that investor base,
Right.
I've chosen to keep it sector agnostic.
Mm-hmm.
Uh, so that's about like the ticket sizes, sectors, and thesis part of
Right.
Lykke.
Right. Swarandeep, what are the areas of interest, right? Which are the areas that you're going after
Hmm.
from investment standpoint, right?
Hmm.
Tell me a little more about that.
Hmm. Sure. So some of the sectors that I'm actively looking at and seeing most of the deal flow that is coming.
Sure.
One definitely happens to be agritech, given
Right.
my main role at CGI. So, and agritech is for us or for me is more broadly defined. So it does not just include like companies which are working in mainstream agriculture, but also aquaculture, livestock,
Right.
and like agri fintech, which is
Mhm.
nexus between agri and fin.
Yes. Right.
So those are like one major kind of sector that I am very interested in. The second happens to be around B2B SaaS, as we have seen in with COVID.
Right.
There are so many companies which are like starting in India but building for the world,
Mhm.
and a lot of them happen to be B2B SaaS companies. So that is one other sector that I am quite interested in. The third being around, I would say, fintech. Like the 1 year that I spent with Sazon, we were largely focused on fintech and embedded finance. So that's where I get the comfort of fintech and embedded finance. So those are
Right.
three. I think with COVID, a couple of others which are very interesting. I would say one. Like health tech, we have
Mhm.
seen. I think with both the waves on
Right.
how our health infrastructure needs so much upgrade. So one is definitely health. The
Right.
second, what we would typically call like future of gig economy, creator economy. So a broad space
Right.
in that. The third being in the edutech space. So a lot of
Mhm.
educational institution, educational infrastructure is also seeing that digital transformation.
Right.
So the third happens to be around edutech within like post-COVID kind
Right.
of sectors. So I
Right.
think those would largely be the sectors that I'm currently very actively reviewing and looking at.
Right. Very interesting. And I think you've recently made an investment as well, right? And I'm sure
Right.
there are many more in the pipeline, right? Like we've
Hmm.
spoken, offline, right?
Hmm.
But tell me a little more about it, right? Tell me a little more about the company that you've invested in recently.
Hmm.
What are they doing? What's the narrative there? And what's in the pipeline?
Sure. So the company that I've invested in, it's called Let's Dress Up, or LDU in short.
Mhm.
And basically, what they are trying to become the Stitch Fix for India,
Right.
which is like a US public company now.
Mhm.
And But the Stitch Fix model adapted and localized or customized according to Indian needs and Indian ecosystem.
Right.
So what they're trying to do is basically go after this a target market of women in the age of 25 to 45 who
Mhm.
are like urban, working,
Right.
with kids, like married, and don't have enough time to
Mhm.
go out for to tailors, give their like measurements every time and look at
Right.
the fabric. So what LDU is basically doing, on the demand side, they are aggregating all this demand, giving
Mhm.
a personal stylist to you a fabric. And in pre-COVID time, that fabric used to be accompanied by a person from the team,
Mhm.
which like we had having the entire catalog of fabric. A woman would typically choose one and have stylist done, and then it would be sent to the tailor partner who would stitch it, and then from the tailor partner it would be couriered back to the end user or the customer.
Okay.
With COVID, there have been some changes on the model, which is like instead of going to like their households, it's more on the DIY model where you take your own measurements in a guided manner.
Right.
When those measurements are there, like they are basically done for life. Like you don't need to give your measurements again and again, even if you
Okay.
change tailors from the network.
Right.
The second thing is the second problem they're going after is the misfit or return problem that happens in
Mhm.
e-commerce,
Right.
and that is because like we don't have India does not have a standard
Mhm.
size chart. So the company, all the data points they are gathering around the sizes and preferences, they are
Right.
using that as a moat on like why would customers come to them, which is like if you give like a product or a clothing which is like
Mhm.
exactly matching the kind of size that I have. There are no misfit, there are no returns. So that's the major problem they're solving. On
Mhm.
the supply side, obviously, there are tailors which have been obviously existent since a long time, but
Mhm.
a large number of these tailors are idle for a significant portion of their day or their month. So they do have some regular customers, but then others would be typically walk-in. So they are
Right.
not fully utilized. So by giving them by aggregating demand and using them, they have a constant stream of orders and the payouts that they would receive from servicing those orders. So
Right.
that's basically what they're doing. And like if I have to describe it in one word, could be Stitch Fix for India, or could be like
Right.
OYO for tailoring, where you're standardizing the tailor partners
Right.
and have a market of women who want everything done from the click of a button, sitting
Right.
at their homes.
But Swarandeep, in an environment like India, right? I mean, our biggest problem has been size, right? In fact,
Right.
I was talking to somebody, recently, somebody who comes from the industry of fashion, right?
Mm,
And I think, the biggest struggle has been size, right?
mm,
And I think right now NID and NIFT, I think, have come together and they are kind of working on, the India size, right?
mm,
Which is essentially going to, because we're very unique in our sense, right? You know, vis-a-vis say US and
right.
Europe, right?
Mm,
And they started to work in this, right?
mm,
And when you talk of an environment like stitching, for example, right, which has
mm,
traditionally been in a certain form, and now of course technology is trying to sort of replace it. There's an experiential element to it, right?
mm,
I mean, there is the visiting side to it, and then there is this engagement that you do with the tailor and stuff like that,
mm,
right?
mm,
How do you replicate all of that in a digital environment, right? How is the company solving for all of those challenges?
mm. So I think the way they build comfort with the customers, obviously any customer who is giving a high-end fabric to the tailor is typically wary of that fabric being like not up to their expectations and in a way
Right,
getting destroyed, and
right.
they basically lose that fabric.
Hmm.
So the way the company kind of innovated or had a creative approach was that to give comfort to the customer who is coming to their platform for the first time,
Hmm.
they started with a like used clothing. So
Hmm.
like so many women have their old saris
Right.
kept at home which they don't wear anymore, and they were
Hmm.
very very comfortable giving them as a trial kind of way, where
Right.
you convert this sari into a suit, so that the customer feels comfortable that yes, this is something that I can kind of bank on and
Right.
do that. So I think that is one creative approach they identified. The second, which is related, was that to start with, they also give that option where if you have a like a suit which
Right.
is already made, that you are very comfortable in terms of size,
Hmm.
that you want to be replicated, you
Right.
can basically send that as a kind of a sample, and the tailor basically uses that as a proxy for
Hmm.
the measurement.
Right.
And once you're comfortable and with that size, basically that's gets stored in their database and for forever, and you don't need to repeat it. The second, I think, element of that social interaction with the tailor is around styling. So they
Hmm.
would want to understand what is like what are hot styles, what is in trend, what is out of trend. So that obviously initially they did it with some tailor designing and stylists that they had partnered with. But now with this round of funding coming in, they are trying to get this design stylist in house, who
Hmm.
can work with their customers to provide the same kind of experience that they would typically get by visiting a tailor store, which is like designing and styling component of stitching. So
Hmm.
those are, I think, some of the ways where they're trying to replicate the same kind of experience that you would see by visiting a store.
Very
And I think
interesting.
as they move over time, as they scale, they do want to have like some experience centers, as
Right.
we would see in other e-commerce play as well, where you could like walk up to that experience store, like
Hmm.
see the fabrics. If you are coming for the first time, give your measurements, and then like
Right.
same thing happens. With, like you get a product or a fabric, stitch product delivered at your home.
Hmm. Very interesting. Swarandeep, I think that kind of answers, what I had in my mind, right? And I think, and I understand where this is coming from. I think the complexity around, the stitch and the feel and experiential is just so difficult, right? But I
Right,
think I think here you possibly, I think what they're trying to sort of do is really sort of, ease it out, right?
right.
And I think also the fact that many pockets in India, and like you said, right, in urban India, are now kind of coming in, where there is no, for example, these are new settlements, right?
mm,
So for example, Gurgaon, Noida,
mm,
in Bangalore, outside of Bangalore, the areas that are coming up, Hyderabad,
mm,
Gachibowli, all those
mm.
are new settlements that are coming up, right?
Right.
Where, people would still want to use a lot of these services, but have no sort of, say,
Mm,
background or history of
mm.
transaction, right? And I think these are
Correct.
services that come in handy in that sense, right? I
Mm,
think that's a very interesting, interesting perspective, right?
mm.
Swarandeep, what's the pipeline like, right? What are some of the other investments that you are evaluating at this stage, right? And which are the
Mm,
sectors that these
mm,
investments are in?
mm. So, as I said, I think I'm very, very interested in a couple which are in the pipeline
Sure.
in the agri-tech space. I think one of the problems that we have seen, at least from my work, which is still like 3 or 4 months
Sure.
uh, old only, around smallholder farmers. So, like for
Right.
example, if you talk about India, 70% of the produce that we have locally is produced by farmers, which are called smallholders. So they
Right.
have small amounts of land. They don't have access to
Sure.
very high quality agri inputs. They don't have access to credit. So
Right.
different agri tech companies have solved or are solving parts to the problem, but there's still a lot of smallholder farmers
Mhm.
who still continue to suffer from these problems,
Right.
and they are not in the tier 1, tier 2 cities. They are like even in remote villages where delivery of agri imports and credits are difficult. So there are a bunch of companies that are trying to solve different parts of that puzzle,
Mhm.
which I'm really, really interested in. The
Mhm.
second being around uh, like, as I said, like B2B SaaS companies building in India, solving for the world.
Mhm.
Like there are a few companies in that pipeline that I'm currently reviewing, and then I would say a bunch of really, really innovative financial products
Right.
or fintech companies. So those are like few companies that I'm currently reviewing as part of the pipeline.
Tell us a little more about fintech, right? I think fintech has been an area of interest to you, right?
Hmm,
Of course, I would love to discuss more about agriculture as well. That's a common area of interest, right? But
hmm,
also fintech, right? So tell me about fintech, right? What are the new, innovations that you're looking at in the fintech space?
hmm. So I think financial services banks have been like highly regulated.
Right.
Uh, like if you go back a few years, were largely non-disrupted or had not seen that kind of digital
Right.
transformation. And like the last few years that we have seen, like have has seen innovations in
Right.
almost every aspect of the financial services value chain.
Right.
And some of them happen to be around, say, subscriptions. So like for
Mhm.
example, in India, we do have subscription, but then our regulator doesn't allow us to like have a recurring subscription where you have data
Right.
on the about the card, and it automatically detects that we
Right.
have so much security and encryption. And there are different companies solving for the subscription part of
Mhm.
fintech vertical.
Right.
So like I'm reviewing a few companies in that space around subscriptions. The second being a combination with agri, which is agri fintech. So how do you solve for like that part of the population? How do you build that credit scoring, and how do you lend? Is it like cash credit? Is it agri input credit and those
Right.
kind of things? So those are a few common themes or trends within the fintech that
Mhm.
I'm very, very interested in. Like one is subscription, the second is how
Right.
do you combine with agriculture.
Sure. Very interesting. Suddenly, agriculture, I think agri and fintech, I think are very, very interesting combinations, right?
Mm,
Now, one of the biggest problems, and you highlighted, right? I think both of them have been of key interest to you, right?
mm,
Um, but when you look at anything in the agri fintech space, right?
mm,
And as soon as you start to talk of agri fintech, right?
mm,
You're essentially talking about the bottom of the pyramid, right? And
mm,
in rural areas, right? Which is not even say tier two India, tier three India, but
mm,
it's actually very, very rural, right?
mm,
And the biggest of all problems when it comes to that sector is that that's a segment that is new to technology, right?
mm,
The current models that are being built essentially, require you to have a digital footprint, right? So that there is a
mm,
certain assessment that you can make on the individual, right?
mm,
Unfortunately, the consumer there is still in a feature phone, right?
mm,
While there are, of course, there are a few feature phone applications that have now come in, right? And there is a little bit of work which is happening on that front to us understand the consumer there at that
mm,
level. It's still very, very difficult. That's number one, right? Number two is that these are people who've largely been dependent on very archaic methods of taking credit, right?
mm,
Or have been dependent on government schemes, right? From
mm,
a credit standpoint. Now that makes the environment very, very difficult, right? For any business to sort of operate in that environment, right? Uh, the third is the political, risk, right? Or say so certain dependence, right, on the party in power, right? Because typically, credit. I mean, because there is a certain comfort that is given, right, in terms of say payments and paybacks and stuff like that, right? So there is a certain comfort, and that's become part of the overall play, right, in that region. Now, in an environment like that, which is so complicated, right? How does one create for that market, right? I mean, it's easier said than done, right? There are many people who talk about it, right?
Correct.
There are many people who are intellectually debating about a lot of these things, right? But when it comes to delivery, it's a very, very complicated ecosystem out there, right? And there are hardly any people who will, come out of that, with uh, you know, uh, with a certain sense of, so with certain profitability, right? It's a very difficult market, in that sense, right? What is your take on it?
So I think you have hit the nail on the head in that sense, which is like for that particular kind of
Sure.
target and segment. How do we build that like IT skills or IT comfort? So
Right.
I think there has to be a mix of both and have a very big trust component to it.
Mhm.
Farmers would typically not start using like apps or if website or those kind of things from day one. So like how do you build that trust comfort? So
Right.
as in agriculture, you typically hear of this extension officers or group level
Right.
officers and that part of the value chain. So I think there has to be a component which leverages on that, who have a very high comfort with the farmers, or you can basically kind of characterize or identify a leader within those farmers,
Right.
who is maybe much more tech savvy or tech advanced than the rest of the group, and who
Mhm.
can basically be that leader, be that face, and people basically
Right.
follow him or her. So I think a lot of companies are actually banking on that, where it is a mixture of physical plus digital model, uh, where you build a trust with that community member, village panchayat person or a sarpanch or somebody like that,
Right.
and then start slowly developing the tech part of it and getting it used by those farmers for their say bookings in terms of agri imports or the credit and parts
Right.
like that. So I think definitely I agree for that part of the segment. A digital only approach or a digital first approach has to be built over time. It cannot happen from day one.
Interesting. Uh, Sadi, I'm gonna take a step back, right? And I'm gonna talk more about Lykke, right? Now, when you're looking to sort of make that investment, of course, there is a certain thesis that you have, right? As the founder of the fund, right? But an idea has to be equally exciting, right? A business has to be equally exciting, right? What are some of the things that you look at, when you're evaluating a business? What are some of the things that you look at, right? And given that you're entering very, very early, right? And it's a very complex environment, right? I think one way to look at it is that, listen, we cut for risk, right? And we understand that there is a very large risk, and there are systemic issues that are going to come in, and it's going to be very difficult, right? An environment. And the other way is that you kind of build the entire play, right? Saying that this is essentially where we're entering. This is how it's going to play out, right? So I mean, there's a lot more effort that goes into the other one, right? And there are both versions of there are both varieties of investors, right? There are people who factored in the risk, saying that listen, this is a mechanical exercise, right? You sort of do it in a mathematical one manner. And then of course there are investors who've really sort of calibrated each step, right, in terms of how the money is going to flow and what's the output, right? Who's going to be the next investor and all that, right? Who designed for all of this, right? What is the play plan for you at Lykke when you are making that investment?
Sure. So I think like let me answer the first part of the question. So
Sure.
one is uh, one if one is entering that early, what
Right.
is the investor looking at or
Mhm.
what I am looking at. So definitely, I think there are two or three major components
Right.
to that um, piece. So
Sure.
one is definitely, and I think one of the most important for me is the team.
Right.
Again, there are like different evaluation points there. So whether they're first time founders or second time founders, how much relevant experience they are bringing from the field. Is this something which is like a personal problem that they faced and they're trying to solve for that, and things like that. So one is definitely the team. The second is the market big enough for this particular play or not? Can they become $1 billion company themselves? And for that $1 billion company, the market itself has to be multiple folds of that $1 billion. So if it's just a $3 billion market, uh, there are low chances that that company can become a $1 billion itself, given there would be multiple players in that space. So definitely the market being the second biggest. The third, I would say, is like, is it kind of, and which is part of the market only, you can say, like, is it a winner's take all market, or there can be multiple players that can exist in that? Uh, the third piece, I think, which is more important from a syndicate perspective, specifically, given that some of my investors or LPs are first-time angel investors. So one of the things that they typically like to see is other co-investors. Given that in syndicate, obviously we do our own due diligence, but then it cannot be as comprehensive as any other institutional investors per se. So, which are other co-investors coming in the round? That gives them the sense of comfort beyond the things that I am looking at or we are looking at. And so that's more on like what do we look at, how we look at, and those kind of things. Where I think I am trying to add that USP or that differentiation point is that more syndicates happen to be just investors of capital and don't have a very high touch component. So the investors that I'm choosing for my syndicate come from a variety of backgrounds, and most of them either happen from the operating side or they have been investors themselves. So like how I'm trying to structure what you can call, for a lack of better word, like a council or a venture partner system is people who have been there, done that. So they come from product side and operation side, so that if the entrepreneur is looking for that kind of early stage help, and something obviously that institutional funds also do, but I think in India it's a fair assumption that most of those institutional investors typically have that consulting, banking, and those backgrounds. I think obviously things are changing now with like startups getting exits and or people shutting down and coming to that side, but it's still fairly low. So I think that is one of the big advantage, that the founder has that high touch element with some of the people who are investing through my syndicate, that they can be that uh, first call away from problem that the founder is facing. The second being that yes, like the syndicate would remain sector agnostic per se, with focus on a few sectors, and those particular sectors that we choose also has a good representation in the syndicate in terms of you can say advisors or venture partners. So they really understand that space. They're obviously blind spot that say completely I would not be able to manage entirely on my own. Everybody has those kind of blind spots. So to have that second kind of uh, like a layer, or that who are collaborating with you from that particular sector. So it could be health, fintech, B2B SaaS, and like agri for that matter. So they add a lot of that comfort beyond just like capital, and beyond just me there as a sector agnostic investor or sector agnostic person. I think that part I feel has a lot of positive feedback that I've gotten from people, even in the screening and evaluation calls, that the kind of question they ask and that they try to understand is very, very hands-on, very high touch, and that basically gives the comfort to the entrepreneur as well, on why obviously they would take that institutional capital, and specifically if they're raising bigger rounds. But one is a speed of like coming back with a decision. The second being this high touch component of the syndicate, where there's so many people who can be a like sounding board and are just one call away. So I think that layer along with the syndicate that I'm building is something that I feel should be able to help one build those focus sectors within that larger sector agnostic space, and secondly have a very high operational touch point with the founders.
Interesting. So I think, one thing which is happening, right, and especially for more so for, more for, say, structures like one like Lykke, and in fact many angel investors as well, right? Very very pre-seed seed investors, right?
Mm,
Is essentially that there is a lot of capital which is now coming into the market, right? There's a
mm,
lot of international capital which is coming in. Of course, that is at a at a Series B and beyond, right? But what has also started to happen is that there is a certain excitement that is it's created at a very very early stage, right? And a lot of
mm,
now new accelerators coming, right, which are taking a
mm,
very bold, aggressive bet, right? And that has kind of increased the expectations of the founders, and they are kind of they're pricing the round in a very different way, right?
mm.
Uh, what are your thoughts about that, right? I mean, where does that leave you in terms of your choice of a set? Are you getting are you still sort of being able to convince the founder to get that participation going, or how is that playing out for yourself?
mm. So I think that's where obviously one it's early days. Like the syndicate has been in operation for roughly about 5 months, but I think the way that I'm consciously building is to start with one founders who I have a personal connect with, or the syndicate members have a personal
Mhm.
connect with.
Right.
So the problem of, I would say, allocation in that particular deal or that round becomes less important if you are fighting versus if you are fighting for a deal which is very very hard, and they're like top institutional investors fighting for that. I think so. It's largely started from a personal connect point of view, or a personal touch. So I'm going directly to founders that I know personally. They
Okay.
understand the kind of value that the syndicate would bring, or I would
Right.
personally bring along with other members.
Right.
So they do see that value, and obviously, like capital nowadays, I think is less of a constraint. It's more about like who do you choose, how do you choose, and
Right.
things like that. So
Right.
and secondly, I think it's a big kind of a decision for a founder to have that right allocation or mix between institutional investors and syndicates and angel investors. And
Right.
I think in terms of having those pre-decided, say, percentage allocations that institutional investors want, and the
Hmm.
kind of uh, like other co-investor that they want on the table, like any syndicate or any angel group is typically not very very rigid on those terms. They're very very flexible.
Hmm.
The speed of execution in terms of decision making and all,
Right.
they are very fast.
Right.
So any founder, I think, wants to maintain that balance between just having institutional investors, where obviously there would be other mechanics and other things into play, versus having a good mix of angels or super angels who have been operators, and syndicates
Right.
who can also help in a lot of other ways, say with hiring and others at a very very early stage,
Hmm.
even at a pre-revenue stage, which a lot of institutional investors typically shy away from.
Right.
I think those are some of the ways I would say. The first is to start with a personal touch. Like there is a good mix of entrepreneurs in the network, both school, college, and other professional networks that I've been part of. So
Right.
start with that, and once over a period of time, the credibility is built, and the value that these operators and other people can bring in is demonstrated and shown. I think it will be relatively easier. Obviously, once anybody starts either a fund or any syndicate, it is always hard work in terms of like deal flow, in terms of getting the right
Right.
investors in this case to be part of the syndicate. So I think that is something that is kind of a marathon, not a race. So that
I
I
know.
I see it in that in it is in that light.
Interesting. Swarandeep, I think we've talked about team, right? And I think you kind of highlighted, right, the team is very very important. I think in many conversations that I've had,
Mm,
I think that's a common constant, right?
mm,
I think everybody kind of is essentially very focused on team, right? And I think that's the largest focus area, right? I think everybody wants to understand and comprehend that equation, right? You know, how have you seen? I mean, what's the change that you've seen in founders that have come in a of course, one change is that we've started to see many people who had working experience, right, professional experience, who now kind of jumped into entrepreneurship, right, and kind of building for India in the sense that and like I mean, it's a massive opportunity, right?
Right.
But there is a significant change that has happened in a post-COVID environment, right? Because a lot of founders, who were working, uh, I mean, post-COVID ecosystem is very different, right? It's a very digital ecosystem, it's a very connected ecosystem, it's a very transparent ecosystem, right? How do you think the team aspect has changed in the post-COVID environment, right? Or your assessment of team has changed in the post-COVID environment, right? How do you view that as a, while you're looking to invest, right? What are the pieces that you're going after there?
So I think the post COVID environment, definitely, even in the founding team, there are people who are not working out of the same location.
Sure.
They are themselves geographically distributed. So I think that happens to be a common theme. Different co-founder, different parts of the co-founding team, right from the first start.
Right.
They might not be working together in terms of geography or common office location. I think that is something obviously all of us are seeing, even in their hiring patterns and having a bigger pool of people to kind of choose from for
Right.
their hiring is something that obviously is there.
Right.
Uh, when it comes to the investing side, like how I have been saying, so I think every team is or every team screening evaluation process is a relative one. So
Right.
obviously there can be people who are good, but then it's a relative comparison
Mm-hmm.
between, say, two people who are attacking problems. So like on the venture side, it could be different business model, but within the same business model there could be different teams attacking the same way. So
Right.
between these two, which one is stronger and why is it stronger in terms of, one, not just the founders themselves, but the founding team, which is like one
Mm-hmm.
level below, or their L2, if you would call. uh, so how is that distributed? Is there a good mix of complementary skills? The different parts of like can this person build not just for, say, 0 to 1, but also 1 to 10 once it reaches that kind of
Mm-hmm.
stage.
Right.
So I think those kind of things have started happening, and I think obviously people's priorities in terms of jobs have also started changing.
Right.
So a lot of people who were earlier very content with the kind of jobs they were doing,
Right.
they are ready to take that plunge.
Right.
And obviously, given the number of companies that we have been seeing in India, both like being incorporated as well as getting invested, there is much more uh, like motivation and encouragement for people to join the
Right.
startup bandwagon. They also started seeing this ESOPs
Right.
getting liquidated, which I think earlier was just on paper. Nobody
Right.
could really realize it, or like there were very few people who could see that getting realized. But
Right.
with that happening as well, a lot more people, one because of freedom, independence relative to a typical corporate job,
Right.
they are wanting to shift to this side and seeing that kind of wealth creation that is happening in the ecosystem. So I think there are multiple facets of the post-COVID world,
Right.
why or how teams are getting evaluated, teams are getting built, and how those earlier like pre-COVID conversations over, say, like tea, over cigarettes, over smoking, over those small talks, getting into co-founder relationships, I think has
Right.
started happening. So I think it's overall a very healthy pipeline and way forward for the
Mm-hmm.
Indian startup ecosystem. And I think from here, I think we will go much faster and ahead, and creating like some really good companies for years to come. And I think 2021 has already shown. I think every 15 days we have seen one unicorn
Right.
coming out of India.
Yeah, it's
So I
been it's
think
been it's been raining unicorns.
yeah, yeah.
Interesting. Swarandeep, a fantastic session we've had. My last question to you is, what's your advice to startups, right? What's your advice to founders, right? While of course there are many founders who are raising capital, there's
Mm,
always a significant lot that needs to strive a little harder.
mm,
Needs to dissect the market a little better, right?
mm,
What will be your, say one or two top points, right?
Mm,
In terms of what they should follow, what should they do, all of that.
mm. Sure. So I think I think a lot of people or a lot of founders get really excited about the funding and fundraising that are happening,
Right.
and start to kind of romanticize about that from day one. That okay,
Mm-hmm.
once they start, they would raise capital on their presentation, on their product, and other things. But I think one of the biggest uh, things is like the sales component of it. Like obviously, you could have a brilliant product, but if you're not able to like sell that,
Right.
like it basically becomes like back to ground zero. So I think there that's where that initial comfort also happens with investors, which is around traction.
Right.
Obviously, there is no magic number to it, but even if there are like few paying customers, that gives that comfort to investors that obviously they can go ahead and understand
Right.
which those customer segments are. Why would they buy that? What is the pain problem that they're trying to solve? So and obviously one if one comes from a very pedigreed academic institutions or organizations, like as soon as somebody starts investors start lining in terms of like having to like wanting to have a conversation, and founders in the those initial days, like the first 2 to 4 months or 6 months, once you start seeing those conversations or getting approached, they get like really excited about that, and sometimes also distracted because of that,
Right.
where they start focusing not on the product and that sales and other things that they need in the initial days, but then on raising a bigger and bigger amount at a higher valuation in their
Right.
seed rounds. So I think that's one, like I would say as a advice or some like a key tip that I would say, like instead of
Right.
just focusing on that, obviously it is important if it is a business that requires capital, is they
Right.
think that they want to build a VC investable business and not just a lifestyle business, they would, if they have already decided that, to obviously approach it at the right time, but not get too distracted in the early stages while you're still like getting your act together or parts of the
Right.
puzzle together, to focus more on the business side than on the fundraising in those initial early days.
Interesting. So, Anandi, it was a pleasure to have you with us. Thank you so much. I mean, this was like a lovely, candid conversation, right? And I think the way you put it together, right? And I think some of the areas that you're going after are actually areas that require a lot of capital. I think what is really happening right now is essentially a lot of surface level work, right? I mean, if you look at, say, for example, agri-tech, or if you look at
Mm,
agri-fintech, right?
mm,
There's a lot of surface level work which is happening, right? And I think
mm,
I think there are many, many layers that are still to unfold.
mm,
And these are complicated areas, right? And I think while I say that, even fintech for that matter is an very extremely exciting opportunity, right? And
mm,
I think what is essentially being or kind of being done or happening
mm.
is largely for the urban audience, right? I
Right.
think you're still to sort of go down the road and address the needs of, say, the tier three markets and tier four markets and the rural markets that are coming up, right? And I think
Mm,
that's going to be an interesting, exciting area in that sense.
mm.
Certainly, it was a pleasure to have you with us. Thank you so
Right.
much for taking the time out. Love the interaction and look forward to having you with us hopefully soon.
Definitely. Definitely. Thanks for having me, and it was a pleasure to talk to you.
Thank you.
Thank you.